From the trading floor of the NYMEX, I'm Jill Malandrino for The Street. And Alan, the energy complex has really had a tough time over the past 5 days. We've seen a 10-handle move in oil just in 5 days. What's behind this velocity?
Well, first, the move down is surprising how far it's gone down without any bounce back. Usually these markets go down or they go up, but they have some sort of pause, some sort of bounce. This market has had no bounce. It's just gone straight down. So to answer the question, what's adding fuel to it, or I guess accelerating it, is we see more of the same news coming out, that nobody's cutting production, they're going to keep producing, and we have a lot of crude oil on the market, and when we get our numbers in each week, we see that we have a large surplus still of crude oil.
Right, you're starting to see it impact economies with the Russian interest rate on the overnight.
Yes, it's starting to have a big impact. You can see it in the ruble. The ruble's gone from 30 rubles to $1 to almost 80 rubles to $1. That is a huge change for a currency. So it's having tremendous impact in Russia.
So while lower prices at the pump have helped us domestically, especially going into holiday 2014 with consumer spend trends, the global economic impact is starting to happen now. So what needs to happen? What levels do you think it needs to go to where we found a bottom, or do you think it's time to dip your toe back in the water, if you will?
Well, first is when it comes to economies doing well or not doing well from the crude oil, economies are going to be different. We have crude oil economies. They're dependent on the crude oil that are going to do poorly. Russia, for example. Our economy, not as dependent on crude oil. So when crude oil goes down, it helps us. Less money at the pump, less money for heating oil helps us out. So we're going to start to see some differentials. So we're going to start to see, I think, some improvements in the worldwide economies that are not crude oil dependent. With that, I think it's going to start to bolster the prices of crude oil. So we're going to start to see some of this excess come off the market. More consumers spending at the pump, more use for heating oil. I think we start to see some of these huge surpluses that we've seen in the past coming off. And we also have something else coming up too that I see. We have crude oil expiration that's scheduled to happen soon, or will be scheduled 3-6 months a year from now. That's going to slow down or stop at the moment. The reason why is because if it's scheduled to produce crude oil at $60 a barrel and we're trading at 55, there's no motivation to continue with that exploration. So it's a temporary shutdown. Those temporary shutdowns, though, have big impacts later on. The reason why is because when the crude oil market does rebound, if it does rebound, and we want to produce more crude oil, now it takes much longer to get that extra production back into the pipeline. So we've seen an oversold market to the downside. We could see a overbought market to the upside.
Right. So what near-term levels are you looking at just to get through the next week or two?
Well, 52.5 is a big number for me, and 50.80 is a big number for me on the downside. If we break those two numbers, then we could see $45. I don't think we're going to see below $50, but if we do, there is potential for that $45 number. I'm looking more to the upside, though. I'm bullish on crude oil. I think it's a oversold market. I think it's a very oversold market. So what I'm really looking for is a breakout to the upside. 57.5 is one breaking point. And then, of course, $60 is a psychological number, and right below it is a technical number. Those two numbers break that, and I think we see higher levels. 65 to 70 is what I'm thinking.
Okay, thank you very much, Alan.
Thank you.
From the trading floor of the NYMEX, I'm Jill Malandrino for The Street.